Let's get to the business news now with Emma Hatton, who's in our Wellington studio. Kia ora, Emma. The Reserve Bank's investigating how sensitive information was sent out ahead of an official announcement. What's all that about?
Yeah, Lisa, so this came through just late this afternoon, the Reserve Bank confirming that about 45 minutes before its monetary policy statement was released at 2 o'clock on Wednesday afternoon, a letter was sent out to a handful of non-bank financial entities, so, entities that do take deposits and lend and do mortgages and things like that, but aren't actually banks. This letter was sent out to them confirming that a funding for lending program would be rolled out as announced today, and it gave some details around some concerns that they had around funding for lending. But what's important is that information was given out ahead of the Reserve Bank's own embargo. And while the information didn't contain any specifics of the program, so it didn't say how big the program would be or when it would be rolled out, the Reserve Bank's really taking it very seriously because the markets are very reactive to what the Reserve Bank's doing, and anything that drops on them like this, it can send investors into a bit of a spin. So it's engaged Deloitte, the business advisory firm, to do this independent review of what happened, why this information was sent out, basically breaking its own embargo. So that's quite interesting. What was actually in the letter was also quite interesting. So it was addressing concerns from the sector that a funding for lending program would disadvantage them because they wouldn't have access to this flow of cheap money that the banks were going to get, and basically they couldn't get on board with that because they didn't have the infrastructure, the direct link to the central bank basically, and setting up all of that stuff would be really prohibitive cost-wise, so they wouldn't be able to get in on it. And there clearly had been a bit of back and forward going on here because the funding for lending program has been, there's been talk about it for quite some time now. And so the letter was sent to try and alleviate their concerns, was supposed to be sent at the same time that the announcement was made, with the RBNZ saying, there will be some benefits for you. The whole point of this is to try and stimulate the economy, keep employment high, keep things ticking over. So, that means less loan defaults, and there'll be some flow-on effects for you guys in the way that you operate as well. But at the same time, admitting basically can't guarantee that there will be a solution that works for all participants here. And then it also just said basically this is a new tool. There's uncertainty around how it will transmit through to the financial markets, and we're going to keep an eye on it. So the letter on its own possibly not going down so well with those entities, and then the fact that it was sent ahead of time and the Reserve Bank broke its own embargo on it, not a good look. So they're really going to be wanting to figure out what happened there.
Absolutely. Okay, you've got a couple of earnings reports for us as well.
Yeah, so we had a couple of earnings reports through. We had Napier Port's full year, and basically that showed that it is holding up pretty well considering the disruption to trade. Of course, because of the pandemic, it made a profit for the year of $22 million, and its revenue was actually up on last year. It had a really good cruise ship season. Even though it was cut short, it still made revenue was up 15% because they managed to squeeze in a few more ships than last year, even though it was cut short. A big earner for it is container services as well. So volumes were lower. Those are those big 20-foot containers that come through. Volumes of those containers were lower through, but they were actually making more per container than they were this time last year. So it offset the volume decrease a little bit there, and they actually, 2% revenue increase on that. And like all companies pretty much that we've heard from, they cut costs by way of staff bonuses, deferred non-essential spending, things like that. So basically held itself up really well for 2020. It is a bit concerned about 2021. Things like container exports are probably going to be lower for them. They gave the example of seasonal labour shortages for the pip fruit season coming up, and that might mean less exports overseas if they can't get enough people to pick, as has been widely reported. And I mean, there's only so far that those cost deferrals can go. There's going to be some of that having to start to unwind in 2021. So it is expecting its earnings for this current financial year will be less We also had the travel software company Serco, its half-year results, so this is the 6 months to September. This is a business which does travel bookings for business clients, so it's no surprise that 6 months to September was really rough for them. They reported a net loss of just over $10 million. They were burning about $1.8 million of cash a month through that time just to stay afloat. But they did a big capital raise. They've got a lot of cash in the bank now. They reckon that business travel is going to rebound. There's a vaccine in sight. They've, drawing on lockdown after lockdowns, business travel rebounds quite nicely. And they're saying, look, the feedback they're getting is that there's no alternative for face-to-face meetings in the business world. You can Zoom and Teams all you like. There's just no substitute for getting on a plane and meeting someone face-to-face to do a deal. So they're quite confident that things are going to rebound, and they're gearing up to be a part of that when it happens.
Emma, just a quick whip around the markets before you head off.
Yeah, sure. So our top 50 index, the NZX top 50, closed down today after 11 consecutive positive sessions. It undid about 5 days worth of gains. It closed down 159 points, about 1.2% to 12,606 points. And looking at the currencies quickly, the New Zealand dollar is staying strong against the US at 68.9 US cents, and up slightly against the Aussie. It is 94.5 Australian.
Thanks, Emma. That's Emma Hatton with Business News.